And good morning, everyone. Welcome to the Macro Snapshots. It is Tuesday, August the 1st, 2026. Okay, guys, I just want to have a quick look at the ISM numbers from yesterday. So this is a survey. It's not hard data, but it's interesting because overall it gives us a bit of a snapshot of what's happening in the US economy. So we had the ISM manufacturing yesterday, and basically it was very, very strong numbers. If you actually look and see here, you can see the overall number was in expansion territory. The headline number you can see up at 55.6, higher than expectations, so pushing a bit higher. And then if you look at all the sub indices, you can see that everything, inventories, employment, production, everything was sort of, you see here, was sort of pushing higher. And then if we break it down, you can also see manufacturing was sort of trending in the right direction, higher. Sorry. Then you can look at So you look at production higher. Then you look at the new orders was also sort of higher. So that's looking good for the future. And then also employment pushing higher. And then you say, well, okay, what about sort of the price index? We're worried about sort of inflation. Now it's still elevated. It's still over 70, as you can see, but it did come down a little bit. So overall, that's a very sort of positive sort of survey set of numbers for the manufacturing sort of sector. And that's one of the reasons, apart from tech, that stocks are also doing pretty well, because it looks as though the real economy in the US, I mean, this is just one sort of survey, but basically everything from new orders or production, employment, everything looking good. Prices are a bit elevated still, but sort of coming down a little bit. And then, if you also look at something like construction spending, that's a bit more mixed, because we see that in the general sort of, commercial sort of area, the general office is coming down a little bit, but maybe that's being sort of outweighed a little bit by data center. You can see here the construction spending on data centers continues to be very strong. And if you look at the the amount of money on data center construction, it's also very, very strong. So putting that all together, you've got an ISM which is showing this, that the manufacturing sector is robust. You've got data centers, like construction spending is pretty good, maybe not perfect, but pretty good. And so that leaves, what about employment? So if we look today, we can also see that we do have some employment data today. And we'll have the JOLTS number, so jobs opening. So it's important to see the number of job openings. Previous was about 7.6 million. So that's the number we want to look at. Also, obviously, very important today to look at the quit rate. So the quit rate, which last time was at about 3 million jobs, what we want to see is the quit rate maybe going up. If the quit rate goes up, that means that people are more confident about changing their job to maybe either get better conditions, or maybe sort of more money, or anyway, they're more confident about quitting and therefore getting another job quickly. So if the quit rate is going up, as long as in concert with the job openings, that's a positive. So putting it all together, it's showing us that the US real economy is looking pretty good. We'll see what happens with the job openings today with the JOLTS number. But also, what's kind of interesting, I just want to show you guys something, is what's going on stocks. So it's interesting, because it was sort of like, well, okay, what's happening with stocks? Are we worried about capital expenditure? And it seems that the market, after a lot of the earnings, is essentially saying, hey guys, the earnings are good enough to sort of outweigh our concerns about capital expenditure. And if you can see here, not only for the huge tech companies, but if you can see, this is for the 2026 earnings per share. And you can see here, this is the estimates from Bloomberg here. And you can see that these numbers are just going higher and higher and higher. So the market seems to be saying, yeah, we're a little bit concerned about higher yields. We're a little bit concerned about capital expenditure. But essentially, the earnings are growing at such a rate that it looks as though things are sort of basically okay. Now, the other thing as well is that you say, well, what about this big war which is happening? There's the Ukraine, there's the war in Iran, etc., etc. But it's interesting, again, here from Bloomberg, you look here at the market sentiment about the mentions of the Strait of Hormuz, and what you guys will observe here, that in terms of the trend, basically, in terms of like, what people are sort of Googling and checking out, and what's on Bloomberg and everything, there's less and less mention of the war. So it's almost as though this situation in the Middle East is kind of fading into the background. And if you look at some of these strong earnings, we had like Palantir last night or yesterday afternoon. And again, I won't go through all the details, but basically you can see here that, if you look at the revenues, it beat the revenues, it beat the guidance, commercial revenues up, EBIT up, EPS it was up, free cash flow estimate was beaten up by 16%. So if you look at a lot of the, the revenue, the free cash flow for Palantir, for example, super good. And then if you look forward into their forward guidance into Q3, again, if you look at all the